Welcome back to Islamic Finance Unboxed, where we simplify faith-based finance for everyone, from experts to the simply curious. Have you ever thought if leasing a car or a house can be done in a halal way? Or if there's a model that replaces interest-driven leasing with something more ethical? Today, we're exploring a powerful tool in Islamic finance world, Ijara. You might have heard people call it the Islamic version of leasing, but it's much more than this. It carries specific structures, Sharia compliance, and ethical safeguards that set it apart from conventional leasing. In this video, we'll discover: what is Ijara, really? Is it a true alternative to leasing? What are its pros and cons? And how is it being used in today's global financial markets? Let's move on. What is Ijara? Ijara, derived from the Arabic word ajr, which means reward or compensation, is an Islamic contract that allows one party to use an asset owned by another party in exchange for rent, resembling a leasing, but under very specific ethical and religious conditions. In its basic form, Ijara is a rental contract. A bank or financier purchases an asset, say a house, car, or machine, and leases it to a client for a fixed period at a pre-agreed rent. Unlike conventional leasing, the ownership of the asset remains with the bank during the contract term. That's crucial, because under Islamic law, you cannot lease something you don't own. Ijara is completely interest-free. There is no hidden or embedded interest in the rent. It's a fee paid for the use of a real asset, not for the use of money. A key Sharia requirement is that the asset must be halal. So, leasing alcohol distribution trucks? Not allowed. This structure has gained traction in sectors such as housing, transport, manufacturing, and even aviation. How Ijara works. Let's look how a typical Ijara transaction works in the real world. Imagine a customer needs a car but doesn't want to or can't buy it directly. They apply to Islamic Bank. Step 1. The bank purchases the car from the seller and becomes its legal owner. Step 2. The bank then leases the car to the customer under an Ijara agreement for, say, 5 years. Step 3. The customer pays monthly rent to the bank for using the car. Importantly, these payments are not called interest, they are rental payments. Step 4. Optional at the end of the lease. If the agreement includes a purchase clause, the client buys the car for a symbolic amount or market value. There are two key types. Operating Ijara, standard lease. The bank retains ownership permanently. Ijara Muntahiya by Tamlik. Lease ends with ownership transfer to the client. This is common in home financing. During the lease, the bank is responsible for major maintenance and asset-related risks because they legally own the asset. The client is responsible for ordinary use and minor upkeep. This structure aligns perfectly with Sharia law, where the party earning income must also bear ownership risk. Ijara versus conventional leasing. So how does Ijara stack up against regular leasing models? Let's start with the similarities. Both involve temporary use of an asset. Both require regular payments. Both can offer end-of-term purchase options. But now, the key differences. 1. Interest. Conventional leasing often hides interest in the pricing structure. Ijara explicitly avoids any form of riba, interest. 2. Ownership risk. In a typical lease, the leasing company may pass many risks to the client. In Ijara, the lessor, bank, must bear any ownership-related risks, as per Islamic law. 3. Ethical constraints. Ijara prohibits leasing haram items or assets. Standard leasing has no such restrictions. 4. Structure. In conventional leasing, the contract often blends lease and ownership transfer. In Ijara, the sale and lease are done via separate, clear contracts, a Sharia requirement. These differences aren't just academic. They reflect fundamental moral values that Islamic finance seeks to uphold: fairness, risk-sharing, and transparency. Pros of Ijara. Ijara brings several advantages, especially for people seeking faith-compliant financial solutions. 1. Sharia-compliant. Ijara avoids riba and gharar, excessive uncertainty, aligning with Islamic principles. 2. Asset-backed. Every Ijara contract is tied to a real, tangible asset, not speculative or derivative products. 3. Predictable payments. Clients pay fixed rent, offering certainty in budgeting. 4. Ethical structure. The contract emphasizes mutual responsibility. The bank carries the burden of ownership, while the client is protected from unfair clauses. 5. Flexible applications. Ijara can be used for homes, cars, businesses, even school infrastructure. It's scalable and adaptable. 6. Popularity with banks. Major Islamic banks like HSBC Amana, Dubai Islamic Bank, and Al Rajhi Bank use Ijara models for home finance and equipment leasing. 7. Ijara Sukuk. The Ijara model also serves as the foundation for certain Islamic bonds, Sukuk, offering investment opportunities based on rental income rather than interest. Cons of Ijara. Of course, Ijara has some downsides. Let's be honest and balanced. 1. Complex documentation. Sharia compliance often means more paperwork. Separate contracts for lease and ownership transfer can be confusing or time-consuming. 2. Higher upfront cost. Banks must purchase the asset first, which may result in higher initial costs or additional fees to cover risk. 3. Limited availability. In non-Muslim majority countries or regions with weak Islamic banking sectors, Ijara products may be hard to find. 4. Maintenance disputes. Who covers what? Even though major repairs are the bank's job, ambiguity in contracts can lead to disputes over responsibilities. 5. Regulatory gaps. In some countries, Ijara contracts lack recognition or clear legal enforcement, making them legally risky in case of defaults or asset repossession. 6. End-of-term confusion. If ownership transfer is not clearly structured, misunderstandings can arise about asset rights after the lease ends. Despite these challenges, many banks are improving transparency and efficiency in their Ijara offerings. Current use in the market. Ijara is widely used in GCC countries, Malaysia, Indonesia, and parts of South Asia. In the UK, Islamic banks like Al Rajhi Bank offer Ijara-based home purchase plans. In Africa, countries like Nigeria, Kenya, and South Africa are exploring Ijara in infrastructure financing and SME lending. One notable success story? The use of Ijara Sukuk for public transport and hospitals in Saudi Arabia and Malaysia. In Turkey, participation banks, the official name for Islamic banks in the country, can carry out leasing activities directly. However, conventional banks must open a separate legal entity for leasing activities. In practice, participation banks refer to this tool as leasing, but it is actually Ijara because they also work within the Halal framework and ethical funding scope. Governments and businesses increasingly turn to Ijara for ethical, asset-backed financing options. Ijara is more than a Halal lease. It's an ethical, transparent financial model rooted in Islamic tradition. It offers an alternative to interest-based contracts while fostering fairness and responsibility. Would you consider Ijara for your next home or car? The crucial point is that once you use that tool, you will add value to halal and real trade, rather interest-based unethical sectors. The motivation is societal and community awareness related as long as economic benefits. If you found this helpful, like, comment, and subscribe to Islamic Finance Unboxed.